This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 26, 2016. Euro dollar. So the euro continues to chop around, but overall the market is showing signs of putting in a top after posting recent 2016 highs at 114.65. At this point, this latest break below recent key support at 12.34 suggests the market is poised for fresh downside towards next key support at 111.45 further down. Any rally should be very well capped with only a break back above 114 and above 114.65 to compromise this outlook. Sterling dollar. So although we've seen a nice bounce and cable back above 145 in recent trade, we have seen some good resistance up towards 145, with the market being unable to establish above the barrier in recent trade. So we would need to see an establishment above 145.15, that recent high that we saw going back to the 18th of March, to really take the pressure off the downside. And until then, there is risk for another topside failure ahead of the next major downside extension back towards initial support at 140.05, below which exposes a retest of the 7-year low at 138.36 further down. Ultimately, we would also need to see a break back above 146.68. That's the high going back to the 4th of February to really officially take the pressure off the downside. Dollar yen. So dollar yen, although we've seen a bit of a bounce in recent trades, still remains pressure to the downside with a lower top side out ahead of the next major downside extension back below recent support, that multi-month support at 107.63, and towards a measured move objective at 106.50 further down. At this point, rally should be very well capped with only a break back above 114.87 to really compromise the bearish outlook. Euro Swiss. So Euro Swiss has largely been locked in a consolidation, although the broader recovery structure remains intact and the market continues to be very well supported on dips down towards the 108 area. At this point, look for a break back above 110.24 to strengthen the bullish outlook and accelerate gains back towards the recent multi-month peak at 112 further up. Aussie dollar. So Aussie is showing signs of topping after putting in a recent 2016 high at 78.35, and it looks like the market could be poised for fresh downside in the sessions ahead. But we will need to see a break back below 74.77 to officially take the pressure off the top side and suggest the market is putting in some form of a more critical top. Until then, there is risk for fresh upside beyond 78.35 and towards the 80 area further up. Dollar CAD. So dollar CAD has done a good job of consolidating off recent multi-month and 2016 lows, and the market could be poised for fresh downside now towards a measured move at 125. At this point, we would need to see a break back above 29.90 to take the immediate pressure off the downside. However, it is worth noting that the market has seen some significant setbacks in recent months, and we could starting to be looking a little bit stretched in favor of some form of corrective bounce. Kiwi dollar. So Kiwi has done a good job pulling back after once again stalling out above critical psychological barriers at 70, with the market recently putting in a 2016 high at 70.54. But we would need to see a break back below 67.59 to suggest that the market is poised for topping out ahead of an acceleration of declines. Until then, there is still risk for fresh upside with a potential break back above that recent high at 70.54 and towards the 80 to 82 area further up. SPX 500. So the S&P 500 is once again showing signs of stalling out after the market had stalled out by record highs in 2015, around the summer of 2015, and then stalled out above 2100 again in November of 2015. This latest run up in 2016 off the 2016 low at 1808 is now back above 2100, but stalling out above 2100 ahead of this latest setback. Look for another top to put in right now ahead of the next major downside extension, with this outlook to be strengthened on a break back below the low that we saw going back to the 24th of March of 2021. Until then, if we do see a break back above the recent high at 2112, that would of course compromise this current toppish outlook for the S&P 500. Gold. So gold has been mostly consolidating in recent trade above some critical previous resistance now turned support at around 1190, and fresh upside is now eventually seen back above the recent highs from this year in the 1280s and towards the 2015 peak at 1307 further up. Ultimately, only back below previous resistance now turned support at 1190 would compromise the constructive outlook for gold.